Here are the 4 biggest things that may shock you about collecting Social Security while you're working. Number 1, if your benefits stop because of your income, they aren't lost forever. Number 2, your spouse's income doesn't count against your earnings limit. And number 3, the earnings test can be monthly, not just annual. And number 4, you'll be surprised at what doesn't count towards your earnings limit. Welcome to the Retirement Learning Lab. My name is Van Richards, and today we're talking about working and earning an income while collecting Social Security. But before I get started, I need to say that the information that I'm providing to you today is purely educational. This is not tax, legal, accounting, or investment advice. For more details on the limits of this information, please stay tuned until the end of today's broadcast for more details. I want to help you to understand this complex topic so that you can make informed decisions about your own retirement planning. If you've already claimed Social Security early or you're planning to claim it this year, you absolutely need to know how much that you can still earn without the penalties. Today, we're unpacking the updated 2025 rules so that you can keep working, keep earning, and keep your peace of mind. This is one of the most confusing areas of Social Security, but don't worry, I'm going to break it down for you step by step. Before we jump into the numbers, there are 2 critical things that you need to understand. First, these earning limits apply to Social Security retirement benefits only. If you're receiving SSI or Social Security disability benefits, this doesn't apply to you. Those programs have completely different rules. Second, and this is really important, the earnings test applies before that you reach your full retirement age. Once you hit your full retirement age, you can earn an unlimited amount of income without any benefit reductions whatsoever. So it's pretty important that you know when your full retirement age actually is. So let's talk about full retirement age for just a little bit. Your full retirement age depends upon your year of birth. And for 2025, here's what you need to know. If you were born in 1958, your full retirement age is 66 years and 8 months. So depending upon the month you were born, you could have reached your full retirement age back in 2024, or you hit it in 2025. Now, if you were born in 1959, your full retirement age is 66 and 10 months. The same idea applies here. You could reach your full retirement in 2025 or sometime in 2026. Now, if you were born in 1960 or later, you don't have to worry about those funky calculations. Your full retirement age is the month that you turn 67, not on your birthday. It's the month that you turn 67. Here's something interesting. If you turn 62 in 2025, your full retirement age is actually 67. Think about that for a minute. That means you've got 5 years where these earning limits could potentially affect your benefits. Now let's talk about the actual numbers for 2025 because this is where it gets specific. If you're under full retirement age for the entire year of 2025, the annual earnings limit is $23,400. Now that's up from $22,320 back in 2024. If you earn more than that, Social Security will withhold $1 in benefits for every $2 that you earn over the limit. But here's where it gets more interesting. If you're going to reach your full retirement age sometime during the year of 2025, the earnings limit jumps to $62,160, up from $59,520 in 2024, and the withholding rate is more forgiving too. It's $1 withheld for every $3 you earn over the limit. Let me give you a quick example. Say your monthly benefit is $2,000 and you're over the limit by $10,000. With the dollar for every $2 rule, Social Security would withhold $5,000 in benefits. But here's how they actually do it. They usually withhold whole monthly checks early in the year. In this case, they'd likely withhold January through March. That's a total of $6,000. And then they would resume payments in April. So you might be wondering, what happens to that extra $1,000 that they withheld? Here's the answer. Social Security doesn't send it back as a refund like you might be used to with income taxes. Instead, once you reach full retirement age, they recalculate your benefit to credit you for the months that you didn't receive benefits. That means that your monthly benefit goes up slightly for the rest of your life. It's a quiet payback over time. Here's a question I get all the time. Does Social Security look at your individual income or your joint income if you're married? Most couples are used to having their income counted together. You know, like when you file your taxes as a married couple, you file jointly, or a lot of people do. So it's natural to wonder what happens if one spouse earns more than the other in Social Security income. The simple answer is that Social Security only looks at individual income. The earnings test is applied to each person separately. So if you're married and both of you receive benefits based on your own work history, your spouse's extra earnings won't affect your benefit as long as your benefits are tied just to your own record. But here's where things get just a little bit complicated. If someone else is receiving benefits because of the work in your work record, like a spouse or a child, their benefits can be affected if you go over the earnings limit. For example, if your spouse is receiving a spousal benefit based on your record and you earn too much, both your benefit and their benefit may be suspended. The same rule applies to children receiving benefits on your record. Now, here's an exception, though, that's worth knowing. If you have an ex-spouse who's receiving benefits based on your record, their payments will not be affected by your earnings. And likewise, their excess earnings won't impact your benefits either. Now, here's another thing that might surprise you. If your Social Security benefits are withheld because you earn too much, they're not gone forever. Now, I touched upon this just a little bit earlier, but let's go into the numbers just a little bit deeper without going too far into the sea of numbers. When you file for benefits early, Social Security reduces your monthly check using something that's called a reduction factor. It's about 0.5% for every month you file before full retirement age. Now, that's not exact, but it's close enough for our conversation. So here's the key. If you don't receive benefits for a few months because you went over the earnings limit, Social Security gives you a credit for those months when you hit full retirement age. They run a recalculation. Officially, it's called the adjustment to the reduction factor, and it'll bump up your monthly benefit just a little bit. Think of it kind of like this. You step back from work for just a few months. That's the way Social Security will look at it if you go over the limit. And then Social Security says, okay, we'll treat those months like you never filed. So your benefit gets nudged higher, not in a lump sum like if you were filing income taxes, but it's a permanent increase going forward. It's not flashy, but it's real money over time. And it's one of those quiet ways that Social Security really tries to keep things fair. So what happens if you retire mid-year, but you've already earned more than the annual income limit? This is where Social Security gives you a little bit of flexibility. Instead of looking at your income for the whole year, they switch to a monthly earnings test. Here's what that means in plain English. In the first year that you start receiving benefits, Social Security checks your income month by month. If you have a month where your earnings are below a certain threshold, they treat you as retired for that month, and your benefits can be paid. Let's take a look at what those limits are for 2025. $1,950 if you are under full retirement age for the entire year. $5,180 if you reach full retirement age sometime during 2025. So if you're under full retirement age and you earn $1,950 or less in a given month, Social Security considers you retired for that entire month, and you're eligible for your check. Now, the same idea applies if you're reaching full retirement age in that particular year, just a higher monthly amount. It's a way to ease into retirement without losing your benefits entirely, even if your annual income is over the limit. Here's my strong recommendation. If you know you're going to earn more than the Social Security limit, don't wait. Contact the Social Security Administration and let them know. File what's called an estimated earnings report with your projected income for the year. Now, yes, that might mean that your benefits get withheld up front, but trust me, that's far better than dealing with an overpayment notice. Those letters from the Social Security Administration can be an absolute nightmare to sort out. And here's why. They don't always show up right away. Sometimes it's 4, maybe 5 years down the road, and then you're digging through the old records trying to remember what the heck happened. So what happens if Social Security says, we paid you too much? What you'll receive is a notice that's called a notice of overpayment. And from there, you've got a few different options. Here they are. Number one, you can pay it back directly, either full or in a payment plan. Now, they do allow you some flexibility on how you pay it. You could pay by check, credit card, or even do it online. Here's the second option. Let them withhold your benefits. They typically start by taking 50% of your monthly check until the debt is actually repaid. And then number three, you can request a lower withholding rate. If it's too much, you can ask for a smaller deduction each month. And then number four, you can ask for a waiver or you can file an appeal. If the overpayment wasn't your fault or the repayment could cause a hardship, you may be able to challenge it. But here's the reality. Most people don't know these options exist. They get this letter and they feel absolutely overwhelmed and they just accept whatever Social Security says, even if it's not accurate. Stay proactive, stay in control. Reporting your earnings upfront is the best way to avoid surprises and keep your retirement on track. Let's talk about what actually counts as earnings for the Social Security limit, because this is one of the most common questions that I get. And more importantly, let's talk about why it matters. The income that does count includes your gross wages from any job that you might have, net earnings from your self-employment, your bonuses, commissions, and your vacation pay. If you're working and you're getting paid for it, it counts. If you're self-employed, there's an extra layer in there that you need to pay attention to. Social Security just doesn't look at your income. They also look at how much time that you're spending in your business. If you work more than 45 hours in a month, Social Security may say that you're really not retired for that month, even if your income is low. If you work between 15 and 45 hours, they look at the type of work that you do. If it's highly skilled or essential to the business, it may still count as substantial services, and you still could have that counted and not get paid for that particular month. If you work less than 15 hours, you're generally considered retired for that month. Why does this all matter? It matters because even if your income is under the limit, working too many hours can still cause Social Security to withhold your check for that particular month. It's not just about the money, it's about the level of your involvement in your business. Here's what doesn't count towards your limit. Pensions and annuities, they don't count. Your IRA withdrawals and your retirement account distributions, they don't count. Dividends, interest and capital gains, they don't count either. Basically, if it's investment income or retirement income, it won't affect your Social Security check. I need to tell you something that's really important at this point. We're talking about what's going to trigger your check. It's going to be like turning it on and off for the month because you've earned too much money for the limit. That is completely different than how that your income is going to be taxed. This is only concerning what is going to trigger your income. It's only earned income from an act of work that's going to trigger the earnings test. So if you're easing into retirement, understanding what counts and what doesn't helps you to avoid surprises. Plan your income wisely and make sure that your benefits stay on track. I'm going to back up just a minute because what I mentioned a moment ago is so important. And that is this. What we've been discussing here today is just what's going to trigger your monthly income from Social Security being turned on and off if you are under the full retirement age. We are not talking about how it's going to be taxed. That's a completely different subject for another day. Social Security rules can feel incredibly tangled, but understanding these earnings limits allows you to work, earn, and collect benefits with confidence. Remember that these limits only apply before your full retirement age, and any benefits that are withheld, they aren't lost forever. They're essentially credited back to you when you reach full retirement age. And again, I know I mentioned it before, but it's really easy to get confused. This is not concerning how that money is going to be taxed. This is only how it's going to be triggered to be paid to you. The key is to be proactive when you're talking about your Social Security income. If you know that you're going to exceed the earnings limit, report it to the Social Security Administration ahead of time. This prevents those nasty overpayment situations that can be a real headache to resolve many years down the road. If you found this helpful, please hit the like button so that others can find this information. And don't forget to subscribe and hit the bell icon for notifications. Drop your questions below. Let me know, have you run into the earnings limit? Are you planning your work around these rules? Let me know what your experiences are. I want to thank you for watching. I'm Van Richards, and I'll talk to you next time on the Retirement Learning Lab.